OMG. Oh my goodness. Have you all heard? Shh. Come a little closer. Come a little closer. I am so excited. Have you heard about the refundable credit that the government has for independent contractors, sole proprietors, self-employed individuals? If you haven't, I need you to stay tuned because you know I cannot stand leaving money on the table and I want to train you how you can recoup yours. Stay tuned. Hey guys, how are you? This is Dr. Cozette, America's #1 advisory accountant and tax expert. Of course, I am the CEO and founder of My Financial Home. We are a boutique firm specializing in taxation, accounting, as well as other business services. And today, what I want to train you all on is this new form that the Internal Revenue Service created at the end of December to help self-employed individuals. So as you know, or may not know, self-employed individuals have an opportunity to recoup or get back a refundable credit in the amount of $15,110. So that's what we're going to be focusing on today. So if you are self-employed, you definitely want to stay tuned to this training. All right. So in today's video or training, what we're going to be talking about is what is FFCRA? What is Form 7202? Which employers are eligible for this credit? We're going to talk about what does self-employed individuals need to know, credit for sick leave, family leave. We're going to talk about due diligence and much more. All right. So what about the Family First Corona Response Act are we talking about today? On March 18th, 2020, President Trump signed into law the Families First Corona Response Act, which provided additional flexibility for state unemployment insurance agencies and additional administrative funding to respond to the COVID-19 pandemic. The Corona Aid, Relief, and Economic Security, which is known as CARES Act, was signed into law on March 27th, 2020. It expands states' ability to provide unemployment insurance for many workers impacted by COVID-19 pandemic, including workers who are not ordinarily eligible for unemployment benefits. So let's talk about this Form 7202. It's called Credits for Sick Leave and Family Leave for Certain Self-Employed Individuals. So what exactly is Form 7202? It is a form used to figure the amount of credit an individual is able to claim for qualified sick and family leave due to the coronavirus on their 2020 income tax return if they were unable to work or had to care for a family member for reasons related to COVID-19. Remember, these credits are refundable credits and they are entered on line 12B of Schedule 3 on our 1040. So some of you may get a copy of this, and so in here it'll have the instructions as well as the form. So let's talk about some credit facts here. So this means that you must be self-employed, an independent contractor, or a sole proprietor. What does that mean? This is for small business owners, and this is a 100% refundable credit, meaning that this is money back in your pocket. All right, the maximum credit you all is $15,110. So let's talk about which employers are actually eligible. Okay, which employers are actually eligible for the tax credit? The tax credit is available to employees with fewer than 500 employees who provide emergency paid sick leave or emergency paid family or medical leave as required under the FFCRA. Whether an employer employs fewer than 500 employees is determined on a snapshot basis. That is, if after April 1st, the employee's headcount dropped below 500, the employer will be required to comply with the act as of the date, that date, meaning April 1st, and will become eligible for the credit. Self-employed individuals can also receive the credit. So, what about the self-employed individuals? So, in order to be eligible or determined or deemed as a self-employed person, the following must apply. It means you are conducting a trade or a business as a self-employed individual, and you would be eligible to receive paid sick leave under the Emergency Paid Sick Leave Act if you were an employee of an employer other than yourself, and or you would be eligible to receive paid leave under the Emergency Family and Medical Leave Expansion Act if you were an employee of an employer other than yourself. So, if a taxpayer conducts a trade or a business as a self-employed individual, if the taxpayer is a sole provider, the primary purpose of engaging in the activity is for income or profit. The taxpayer is involved in the activity with a continuity and regularly. The taxpayer must maintain appropriate documentation to show that he or she is a self-employed individual. So let's talk about this credit. Let's talk about the credit for the sick leave. What does that look like? How is it that you know that you qualify? So, an eligible self-employed individual qualifies for a credit for sick leave if the taxpayer was unable to perform services during the period from April 1st to December 31st as a self-employed individual because of one of the following reasons. Number one, the taxpayer was subject to a federal, state, or local quarantine or isolation order during COVID-19. Number two, the taxpayer was advised by a healthcare provider to self-quarantine due to certain COVID-related incidents. Or number three, the taxpayers were experiencing some type of symptoms of COVID-19 and sought out medical treatment. If this is the case, then the taxpayer is eligible for $511 per day up to 10 days. And so the math equates to $5,110. Okay, so this is if you yourself were sick. You are eligible for $511 for 10 days, and that equates to $5,110. Okay, so just keep that in mind if you were sick. Now, what about your family members? The same thing applies. If your family members, you had to care for them, whether it was your son, your daughter, your spouse, your grandmother, your aunt, your niece, your nephew, if you had to stay and quarantine and take care of a sick individual, then you are eligible for up to $200 per day for 10 days. So that's $2,000. So let's just recap all of what I just said, okay? So the emergency or the credit for the emergency paid leave for reasons 1, 2, and 3 that I just gave, meaning it's specifically for yourself, then you are eligible for up to $511, limited to $10 days, per year. So if we do the math, 511 times 10 days is $5,110. The credit for emergency paid sick leave for reasons 4, 5, and 6 means you get up to $200 per day, limited to $10, or $2,000 per year. So that's $5,110 and or that's $2,000. So if you cared for some family members, it's $2,000. It's $200 per day for $10. Or if it was for yourself, it's $511 per day, or excuse me, up to 10 days, which equates to $5,110. So let's talk about the credit for the family, the credit family leave, which is a little different. A credit is also available for self-employed individuals who were unable to perform normal duties from the time of April 1st through December 31st. As a self-employed individual, because the taxpayer had to provide care to their son or daughter under the age of 18 whose school or place of care was closed, or whose child care provider was unavailable for reasons related to COVID-19. So guess what? That means that you are eligible for a credit up to $200 per day, limited to 50 days or $10,000. Okay, so I want to define what is it about the son or daughter. Who qualifies you for the son or daughter? Under the FFCRA, a son or daughter is your own child, which includes your biological, an adopted, a foster care, your stepchild, a legal ward, or a child for whom you are standing in local perimeters for, meaning someone in which you take care on a day-to-day basis, you have the responsibility to care for them, and or you provide financial support for the child. Okay, so again, let's kind of recap here. So the credit for self-employed individual is further limited to self-employed by dividing 260 for purposes of the 511 per day, or 67% of the above limit for purposes of both of the 200 per day limits. So let's give you an example. If the total self-employed income reported on line 31 of Schedule C, Form 1040 is 5,000, the 511 per day would be reduced to 19,000. There's the calculation, 5,000 divided by 260, and the 200 per day limits would be reduced to $13 per day. Okay, so let's keep in mind that not all states were under this order. 5 states did not have some partial or full stay-at-home order as a result of COVID-19 during parts of 2020. Those states include Arkansas, Iowa, Nebraska, North Carolina, as well as South Carolina. So these states would probably not qualify for this credit, or they would partially qualify for this credit. All right. It's important that we all do our due diligence. The taxpayer do their due diligence by providing sufficient backup to support this refundable credit. And it's important that the tax preparer make sure that they do their due diligence by getting the sufficient documentation from the client. This is one of those areas, you all, where audits will result as of this credit. So make sure if you plan on taking this credit that you have sufficient backup to support everything about this credit and everything that you put into your return. All right. So with that being said, I would like to thank each and every one of you for sitting through this training, this really quick training on the new tax form 7202. And as always, if you have any questions, I encourage you to reach out to me. The best way to connect with me is through email at info@myfinancialhome. That's info@myfinancialhome. In the meantime, please do follow me on all social media outlets as Cozette M. White, and make sure that you subscribe to my YouTube channel. I'm on YouTube as Dr. Cozette M. White. Make sure you subscribe, make sure you hit that bell so that you get every single notice when I go live. All right. In the meantime, I need for you guys to make it a great day. Go on out there, have yourself an awesome and amazing day. And I can't wait to see you at the top. Take care.